Eric Mwather with the mentorship video. Let's take a look at the Indian market here. We're going to begin by taking a look at the market as viewed by the S&P Nifty index. And here we see that the one thing I'm going to stress here is this number here. So about 70 to 75% of any stocks move, any stock, any sector is going to be based on the general direction of the market. And you're going to see the confirmation of that when we take a look at the individual stocks that you had sent me. You'll notice that most of them pretty much look like this, especially on the monthly. And the reason is very simple, that 70 to 75% of any stocks move is based on the general market. And so I believe personally that we should spend most of our time trying to figure out where the market is going so we can take care of this big influence in the market. And that's why I always think it's a good thing to begin by taking a look at the market, getting a feel for the market, and then now you can go to individual sectors, which individual sectors do account for about 15% of a stock's move. So you take care of this first, and then you go to the 15%, and then you can go and find individual names. Because if you ignore the market direction, sector direction, you're pretty much going into an unknown. But if you know what these two are doing, the market and the sector, then the stock selection becomes easy, because generally you want to find a bullish market if it's there to be taken, and then go find the best leadership stocks in the sector, and then go within the sector to find your individual stocks. So that's the best way to do it. But you'll notice most of the charts on this video, the stocks that you sent me to take a look at, they all have the similar look and similar feel. So we begin by taking a look at this monthly chart, and you can see from a generic observation, we are currently working on number 1, 2, 3, 4, 5, 6, currently on our 7th straight positive month. Obviously we are due for a pullback. When that pullback will take place is very hard to tell, but we are due for a pullback. On a monthly chart, you mostly want to get a buy whenever there is at least 1 month of rest, and this is a perfect example here. You had 1 month down after this monthly closing high. So once you took out the previous monthly closing highs there, that was your most recent monthly breakout. On this monthly chart, there hasn't been another monthly breakout, and prior to that, the previous breakout was during this breakout above the previous monthly closing high. So there was another breakout here. I believe that was in March of this year. So we are looking for a rest period, and then we'll see whether it can take out the next or the monthly closing high that is going to be recorded. But we do need a break from this 7-month rally. We want to go back and take a look at the long-term view. And the long-term view here, so you can see here between 03 and late 07, we had this magnificent run up pretty much all over the world. Nice move. And you see that the Indian market did do what a great market does there. It stayed generally above 69.1. And if you have a question about how I come to this number, let me know. But I have videos on YouTube explaining how this is a mathematical certainty, that this is something happens to the psyche of stocks and markets and instruments when they move their RSI above that level. You can also see here that there is a line. If I draw a line just around 61.8, so now 61.8 on the monthly, and you can see that that line has been also instrumental in the bullish phase of this run. Finding support at the 61.8, generally around that number, has been good. And you have this short-term drop here, which was after the break back below 61.8. So lots of moving parts. What I wanted to discuss here is, if you take a look from a relative perspective, stocks don't go down until you have a major monthly breakdown. So there was a monthly RSI support line here connecting this low, that low, and this low. So that was an established line, and it's only once you broke below below the line, and then 2, you broke below 69.1 that the market had this, or came off the highs, and we had the bear market, steep bear market of 2008. That's one view. The other view, from a long-term understanding of how the markets are behaving, there was also another line connecting the highs, or connecting the lows, that double bottom low, that low, and through this low here. Once that was broken and you had this sharp reversal below 69.1, the market then broke the strong uptrend. What I'm getting at here is, you can see, depending on how you draw this, there is a trend line that has not been broken here. It's gonna take many months to break that. I mean, might even be into next year or 2016 when we break this. So that there's a long-term support there. There's also another short-term support, but somewhere here, which has not been broken, connecting the lows on the RSI. What I'm trying to say here is, even with a pullback, I'm not sure yet that this is gonna break. The only way it breaks is, you see this sharp angle of break, the very sharp angle of a break there. That's what could break the market, if we have something that triggers a very strong steep break below 69.1. All this to say, the Indian market still looks safe, and the strength of the market trading above 69.1 is not something trivial. I think it's a big deal. It means we can get pullbacks that are healthy for an entry. Now if we take a look at the weekly, now you see here that one of the things that is going, and I mentioned this in the weekend analysis video, was if you take the tops there, that could be a problem, because as you can see, it's very easy to see that you are making higher highs in price and declining technicals. The key here, if you want to go short, is wait for this market to drop its weekly RSI below 69.1, and I think at that point you can make the early assumption, it's an assumption, that maybe there's a pullback here. That would be my thinking. That's my thought process. One of the reasons why I say that is, if I draw a straight line like that, connecting the lows on the weekly, you see it comes with a break. There's a break there, so we've come all the way back and seem to be back testing the break here. And I think if this is confirmed with a down week, that's going to be an area where you can take short positions and see how far this market drops. That's one view. So higher highs, lower RSI performance on the daily, there on that line connecting the highs, back test of this line here could be a problem, and that's one way I can look at that. Generally the market looks okay, again, because it's trading above the 10-week and the 13-week moving average. That's generally a good market. As you can see, since the lows here of the year, it's been holding that 13-week moving average, 8-week moving average very well, very steady. Even here it came and finally moved back above that moving averages. So I think from a general observation, you really have to be searching for a lot of reasons to be bearish here, because the market hasn't given us that yet. We close here Friday above 69.1. Now I suspect that this could be a problem. It's not the worst type of negative divergence. Here you are making higher highs, and we seem to be coming to a point of resistance if you connect the highs. Now what's really interesting is, I didn't draw this, you didn't draw this, the person next to you didn't do this, the market has done this on its own, seems to be respecting this declining line. If that's the case, and we get a pullback back below 69.1, that's the key. You can see here off this high, it's only once you moved and could not defend the area above 69.1, that the market had this shallow pullback. And so if we can see a move back below 69.1, then the assumption becomes that, okay, maybe we are due for a pullback. We don't know the type of pullback that we are going to get, because this market has been respecting and holding at the 50-day moving average. And so you can't really say it's a bearish market. In fact, obviously it's a bull market. But the key is you take the trade if it moves below 69.1 and see how far it's going to go. You never know whether it's going to come here at the 50-day. So either find support at the 50 or fail. So we're going to, it's hard to tell at this point what's going to happen here, but you can play the move from here back to the 50-day moving average. There's another view, and the view is based from the previous break. So coming off this short-term high, and so we just take that and draw a straight line. You see that this could be a reasonable area to expect some type of resistance on that daily chart. Okay, so we are stuck pretty much. There's one thing you can observe here, and there was a breakout there around the 50, which was responsible for this. So around the 50, this general area here, this price move also moved it above the RSI resistance line there, something like that. Nice entry point. Because how do we know it's a nice entry point? Because obviously the market is telling us that's a good entry point. So if we draw a straight line around the 50, you can see every time we come back to the 50 with uniform activity back above the line, that was an ideal time to go long pretty much any stock you are watching. Also uniform activity here, that's a nice bounce. Also the bounces happen to be around the 50-day moving average, bounce around the 50-day moving average also. Double bottom support with the uniform activity each time back to the 50-day moving average and bouncing off it, that's good. And also happens to be around the 50. We had a small support there, which was this support, and a 2-day, 3-day move. Subsequently, we would break down below that range here, which was no reason to be long, or at least to initiate long positions. It's only when the market recaptures the level back above the 50 that can become an area of interest to go long, which happens to be somewhere here. So that's one line of support that the Indian market eventually is going to have to find. You know, this continues being a long term, it hasn't been violated, so we know if we come back there and find support with uniform activity, then the position has to be to go long. There's another secondary line coming off the lows if we take that there. So we draw a straight line, we can test that, and yes, it makes sense because you see support there and then uniform activity below the line and back above it. That uniform activity tells you that it's something going on, and to test that, you see that that was a nice entry point, and since then we've had almost straight daily closes since that day. So that's two lines we need to watch down the road: support at the 50, and if that fails, there's going to be another last line of defense on this support. So there are two levels of support in case we get pullbacks in the market here. So let's take a look another view at the Indian market, this time by taking a look at INP, which is a US based ETF. Just want to show you that it's giving us some type of a resistance if you connect the highs. Now of course this one follows the Nifty, so I'm not going to put too much weight on this analysis. I would rather go with what the Nifty is saying as opposed to an ETF. So there's some type of resistance connecting the highs. It's something we have to keep at least aware of that. If this continues and if we begin the new week with a drop, or maybe if we close the week down, that's going to confirm that a couple of things. Let me take that. So if we have a down week like we had last week on this ETF, that could confirm resistance on that side, also could confirm failed breakout. So those two things put together could suggest a pullback is due here. If we take a look at the daily, what you see here is this line connecting the tops. Now without any adjustment, it's very obvious that it's where it's stalled recently. So unless it breaks out, so it's very easy to understand here how to follow this. A breakout that brings it above this area, above the line, is bullish. If it doesn't break out, then we have to conclude that this is one that could actually be telling us to be ready for a pullback. Also, this slide down began when off these highs, when we broke this RSI trend line somewhere there. You can see we've come here and hit this line twice, so that's a double top, and maybe we've already seen a sell signal as of right now. The key here is anything below the blue line is bearish, anything back above the red line is a breakout, from above this uniformity line or from the tops. So resistance has been confirmed, but we have to be careful if the market decides to break out. On the monthly, we are slightly down here for the month, not slightly, but what I wanted to sensitize you is if we go to a long-term monthly view, so all data, let me go back a couple of years here. Let's go to 2000. Just bear with me as I change my parameters here slightly. Alright, so this is all the data on this ETF. All I need to do is draw a straight line connecting the previous sell points. There. This was a sell point coming off the highs in late 2007. Resistance here, which was this highs in late 2010, and you can see here the possibility, it's a possibility because it hasn't happened yet, that this rolls over back below the blue line, confirming this as a short-term major sell signal. So that's the line I'm watching here. This ETF makes me a little bit cautious, especially after that nice run-up of the last 7 months in the Indian market. So if we go back to our initial prognosis or analysis that if 70 to 75% of a stock's move is based on market direction, conclusion here is the Indian market remains healthy. We are probably due for a pullback, but how serious the pullback is going to be is hard to tell at this point. So if I was to make a directional bet, I would say if we get a market breaking down or confirming down days, or the week turning negative, especially if the Indian market, let's go back to that weekly chart, if the weekly on the Nifty turns below 69.1, a move back below 69.1 would confirm to me that this healthy market is due for a pullback. The level of a pullback and how serious it's going to be is going to depend on a couple factors. One of them being how it's going to respond when it comes back to the 10-week moving average, 13-week moving average. So I would say if you're going to play this, this would be a key. Anything below 69.1 on a weekly would confirm resistance on that declining RSI line, and probably the best way to go about that is to go short, because once we take a look at the stocks that you sent me, you'll see that they are extended just like this market is extended, and those stocks are also due for a pullback. So let's go to the individual stocks that you sent me. So let's go to the first stock on the list, and it is, I think that stands for Industrial Bank or something like that, so bear with me, I might not be familiar with the names, but that's not a big deal. And you see here, just like the Indian market, the RSI continues holding above 69.1. Very strong move. We've had the last perfect entry point on a weekly chart was during this breakout here. We haven't seen any rest on a monthly basis, so this stock on a timing perspective is already past the ideal buy point. So I would say not the best time to go long. You want to go long after you've had at least one minimum down month, like the last one was during this breakout here. At least one down month, and then breaking out above the previous monthly closing highs. Here, nice entry here, nice entry here. For now, looks like it's extended. If we go take a look at the 2-year weekly, see what we got here on the 2-year weekly, and you can see also it's had 1, 2, 3, 4, 5 up weeks and 4 weeks since the breakout. So on an entry level, all these stocks are extended. The ideal entry point here was during this breakout above the previous weekly closing high, and so here also on the weekly looks like we are due for a pullback, or at least wait for some rest period. We had some rest period, as you can see here, for about 1, 2, 3, 4, 5 weeks below the previous weekly closing high, and then that breakout. So you see that we do need a rest period here. There was another entry point. If we go back and see where the entry point was previously, was this during this breakout after some consolidation and digestion period there. So this just tells me there's no need to rush and buy these stocks. They're due for a pullback, and in the description of this video I'll have a link explaining how I view entry into a nice moving stock. So a stock with momentum, it's always good to have an idea of when to go long. As you can see here, we had a weekly closing high, you got a couple weeks of rest, and so this breakout, successful breakout, finally was the perfect entry point. Yes, on hindsight, but it happens over and over again. So for timing basis, you got 3 entry points on this chart, on the weekly here, here, and during this breakout here after a few months of rest. Most of these charts that that you sent me have the same analysis, so maybe we won't go into detail on all of them. They all seem to indicate the same thing that the Indian market is saying, that there's a pullback. Remember, 75% of any stocks move is based on the general market, and the general market has been extremely hard on that side of the world. Okay, so let's take a look at, for the sake of let's take a look at the daily, because most of them are identical. Let's just spend a few minutes on the daily. In fact, go back to the weekly here, and on the weekly you can see RSI continues trading above 69.1. That's a strong market. And if we go to the daily, you see that the daily is also continues holding above 69.1. This is when stocks really take off. It moved above 69.1 here, which is this period here, and it has remained above that since then. Here's an extended market that really is due for a pullback. I don't see the need in chasing them. Stocks don't go up in a straight line. My thinking here is patience probably suggests that wait to see whether you can either go short when that Indian market goes below 69.1, but don't chase. Don't chase. And again, on the description, I'm gonna have a link showing you how to time this entry on daily, weeklies, and monthly charts, at least the minimum requirements to consider before joining a momentum stock that is already doing well. Let's go to the next idea, and here we are taking a look at Imami. I believe that's the name of the trading there. Change my tool here. It's a line. All right, so you can see that that's the name of the stock, and even here we see that we've had nice run up. How many weeks are this? 1, 2, 3, 4, 5 straight weeks before currently down for the month. So with the monthly RSI trading above 69.1, whenever you see this type of a strong move, you really have to be aware that you need to time this perfectly. So during this run up on a monthly, there was no rest, but I'm sure on the weekly, and this is a 3-year, so all of the monthly charts that I show you are going to be 3-year. All the monthly charts are 3 years worth of data. All the weekly charts that I'm going to show you are going to be 2 years worth of data, and all the daily charts that I'm showing you, my default is 1 year, so at least you can know which parameters I am using. So if you go to the 2-year weekly, just to see whether there is any entry point, 2 years weekly, you see that the most recent breakout was during this rest period. So there was a high recorded there, and you had a couple weeks of rest. Let's see, a couple weeks of rest there, and finally broke out, and that breakout took place here. So basically that was the most recent perfect entry level there. So I personally don't see a reason to chase this one, just because it hasn't given you a rest period. And again, the link that I'm going to send you on the descriptions is going to explain why. The other recent entry point was here. So on a timing basis, all these stocks, the RSI continues holding above 69.1, which is exactly what you want. You know, moving above 69.1 here was this entry level. So if you're looking for momentum in a stock, this is where you want to go long. When it clips above 69.1 and all the parameters are met, you want to be a buyer, because that's when you see this short-term swing trade position. There's another move here above 69.1 coinciding with this nice weekly breakout. That's a nice move in a couple of weeks. There was another breakout while the RSI was already trading above 69.1. A fresh breakout when the RSI is already trading above 69.1 is the most bullish, because you get the biggest thrust in a stock. Why that happens, I don't know. Seems to be a natural thing, but on a timing basis, the stock is not giving you. So again, from a timing perspective, the move above 69.1, like previously, there was a move above 69.1 here, which was responsible for this swing trade, nice entry. There was recently another test and a warm-up of this 69.1, came down. At the same time, the price had pulled off the previous weekly closing highs, so you set an alert for that weekly closing high. If it gets breached, that's a buy signal. The RSI also moves above 69.1 here and remains above that since then. So that was your perfect entry point there. And also, if you take this weekly closing high, there was another breakout while the RSI was still above 69.1. So a breakout when your RSI is above 69.1 is a very powerful indication of intention to go higher. So you always want to make, or at least if you can find stocks making fresh breakouts in price and the RSI on the weekly or on the monthly also moving above 69.1, it seems to be a natural thing that just tends to move stocks higher. Now all of these charts that I'm going to be talking about and the ones you sent me, they're all high. And as you can see, we're taking a look at Aztec Life Sciences here on the monthly. Man, this thing is due for a pullback. You've had 1, 2, 3, 4, 5, 6, 7, 8, 9 straight monthly positive closes. The entry point on your RSI was above here at 69.1, was somewhere here. And also take note of the fact that we had a 3-year breakout on the RSI a long time ago. So the breakout, ideal breakout, was here. Also happened to be a breakout above 69 or 60, 61.8. Oops. So 61.8 moved to 3-year highs, all-time highs. Man, that minimum requirement just has a propensity of just moving stocks higher. So there was a perfect entry point there. Another entry as it moved above 69.1. And since then it's just been money. It's just been very profitable on that trade. So same type development. If you want to take a look at the weekly, just rehash, same thing. All these are due for some type of pullback, at least entry points. We don't have fresh entry points because we don't have rest period. We need a rest period. Without rest, you can't get this spike. So you need a rest period, and here you had a perfect rest period for about 4, 5, 6 weeks, and then a breakout above the previous weekly closing high. Right now we only see 1 week of rest, which is last week, and so we need at least another week of rest so that we can move higher. So on the weekly chart, once you get your weekly close, you need at least 2 weeks closing below that previous 2 weeks below this level, and next time you move above that on the 4th week, then that can be your buy signal. On the weekly charts, that's a minimum requirement, and again the link that I'm gonna include in the description should explain that simple principle on how to follow stocks on weekly charts, monthly charts, and daily charts. So same type analysis on all of these stocks, that they do need a break and fresh entry points to reset the current strong move. Take a look at Cadila Health Sciences, and on the monthly, this was the most recent perfect entry point on the monthly there, above the previous monthly closing high there. Price would have been at about just under 1,050, and that was your entry point somewhere there. Month of, I believe, was April, somewhere around there. But since then it's had straight monthly closing highs. You see that a move to 3-year highs somewhere around there on the RSI also coincided with a move above the previous monthly closing high. So on your monthly, the stock is definitely due for a pullback, or at least giving you 1 month down, which would give you minimum requirement for a fresh breakout. On the weekly, now I'm not sure that I should go through all this because they are all the same. You can see the most recent entry was during this rest period, and then an entry point during the breakout, subsequent breakout. Since then, we haven't seen 2 down months, 2 down weeks setting up for a breakout. So RSI continues holding above 69.1. Again, this move above 69.1 was this breakout, and stock has done very well for a swing trade. Move above 69.1 and stayed above that during this period was also this entry point here and this move. So the biggest moves on this chart are from here to here, and again from here to here, and all of them coincide with the RSI holding above 69.1. so this is a magic number. This just sets you up for a very good trade. Let's take a look at another idea here, and I've said throughout that they're all gonna be the same, irrespective, because I've looked at all of them prior to making the video, and they all look the same. Take a look at India Napalm Electrical, and what can I say? It's due for a rest. It's had a very strong move. Most recent breakout was here on the monthly, which was this breakout here, coinciding with an RSI back above 69.1, and you can see that this has had a major run. I mean, this is a fantastic move, and the RSI gave you a perfect entry point during this move to 3-year highs, breakout there. So another stock that is in need of a pullback. Let's go to the next one as we take a look at the last one on your list, which is Panasonic Appliances. And here too we see that, just so that we can repeat and reaffirm, a move to 3-year highs is what began this move on the RSI. RSI breaking out to 3-year highs was this entry point here at 60, and since then you've seen this magnificent run up. The momentum started picking up. If you just look at the chart, your momentum started getting traction, acceleration in price somewhere here. This exponential move is because the RSI moved above 69.1 during this phase, and since then you have this acceleration. Alright, so here's a stock that is in desperate need for a pullback, and so why chase? So what we are talking about here is timing, and the timing is not right for these stocks. You can see here that it's only when you have a rest period for more than 2 weeks on a weekly chart, which is what is in front of us, this weekly chart. It's only when you have rest period and a breakout that you get this fresh move. And you had another one somewhere here. My chart is not showing me very well. There was a rest period here for a couple weeks, and then a breakout during this phase, and those are the last 2 perfect entry points. Right now you see that the stock is continuing holding above 69.1, which makes sense because the Indian market has been on fire. It stayed above 69.1 throughout all this period here, and that is responsible from trading in the 60s, 70s, all the way to trading close to 300. just because the RSI has defended 69.1 on the weekly time frame. So in a nutshell, and to summarize, all the stocks that you sent me, even though they meet the minimum requirement for 3-year highs and the MACD and all that, they are needing rest before they can break out again. So from a timing perspective, this move seems so extended, just like the Indian market and the Nifty is concerned. My thinking here is a pullback will be healthy. The nature of the pullback is going to determine how serious the market is going to drop. It could be a serious high, it could be a short-term high before back to new highs. Of course, we don't know. We can only play the market in front of us. The market in front of us and the stocks in front of us seem to indicate we need a pullback off recent highs because of this extended strong move. Eric Mwathe, keep you guys posted. Otherwise, let me know if you have any other stocks or any other questions, and we can continue on with the mentorship program. Eric Mwathe, enjoy the beginning of the week. Peace and blessings. Woo!